Inflationary data comes in cool. Starbucks names a new CEO. Tech showing outperformance. We're going to bring you all the top stories today with my brother Matt. This is Coach Mark, tackletrading.com. Matt, we've been talking about tech potentially leading here in the Traders Lounge at Tackle Trading for seemingly 2 weeks now. We are certainly seeing evidence of that. What are you seeing in the charts right now?
Yeah, and that's the biggest question this week. Obviously, we're going through some volatility in the market. We're going through a big week in the market with the CPI report here tomorrow. But the biggest question of this week is a technical question regarding the indexes, and it's which one. And we spent all day yesterday in the Traders Lounge talking about this. Which one of these indexes starts to lead the charge, because they're all running on the same gasoline up until this week. And so we were expecting a little bit of separation this week. We were expecting that separation within the technology areas of the market. And again, it's early, but that's exactly what we're seeing right now. When you are looking at the indexes of, for example, and you're looking at the S&P 500, the S&P 500 is looking at a little bit of a deeper bearish retracement at this point. You're now working up into that very important 540 number, right where the cluster of the 20 and the 50 day moving averages is looking. You would be looking at a bear stop out analysis with the S&P, and the analysis coming into it in the newsletter this weekend was, if the S&P is going to lead the charge a little bit better than RSP, which it is, well, that's going to be a telltale sign that it really is the NASDAQ, the Qs, and more aggressive areas of the market that is leading the charge. And that is certainly the case with the NASDAQ. Once again, it's early this week, but 3 days in a row, Friday last week, Monday this week, Tuesday this week, the NASDAQ is quietly outperforming in this bearish retracement. And so the NASDAQ coming off that 200-day moving average, working into the 20-period moving average, deeper bearish retracement is what you're looking at there. And in comparison to that, you look at IWM, which is the Russell 2000. It retraces back up, but can't even breach your short-term moving averages. The 90 EMA can't get above. And when you're looking at the last 5 days, not a lot of price movement here. A lot of up, a lot of down, and then a doji just kind of sitting there. You come back over to the NASDAQ, you see a little bit of a better price action as it works up, 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 up. And so it's once again early. We're still tracking bearish retracements in the indexes. But 2 days into the week, the NASDAQ now is the third consecutive day leading against the rotationary trade, which tells us that we're seeing rotation right back into the NASDAQ here, Mark.
Yeah, you know what they say in Major League? 3 is a winning streak. Starbucks maybe has their own winning streak coming up. Still's the CEO from Chipotle. We're going to talk about apparently inflationary data first.
I was wondering where you were going with that.
Yeah. Well, listen, stocks running. Tomorrow is the consumer price index that comes out, the most important inflationary report every month. I got a little preview, though, in the PPI. Numbers came in soft, didn't they, Matt?
Yeah, they did. They came in right at 0.1 on the PPI, 0 if you're looking at core, right underneath the expectation on both of them. The key takeaway out of the PPI report, which is not the most important inflationary report, would be that inflation is moving in the right direction for the central bank, which typically would give them a little bit more ability to start lowering that interest rate. So it does look like September, as long as this data continues to be where it is, and we haven't really seen anything updated or changed from that economic landscape equation from when the central bank kept the language the same way just a couple weeks ago. The data does lead to a cut in September, and I think this is what the PPI report suggests as well.
Yeah, all that needs to happen is the CPI confirm that similar readings are going to be very celebrated by interest rate sensitive areas of the market. Let's get to that Starbucks news, man. Maybe I need a little extra coffee this morning. Still's the CEO from Chipotle. One stock way down, one way up. Home Depot also has earnings. Break it all down for us.
Yeah, Starbucks obviously has been going through some pretty difficult economic situations recently, and Starbucks decided to replace their CEO here today. And it's never a good look when you for that individual when you get replaced. That's bad enough. It's really bad when your stock goes up 20% as well when you get replaced, but that is exactly what is happening with Starbucks. Chipotle down, Starbucks up. Starbucks was going through reversal situations, so the news is obviously being celebrated in Starbucks. And just recently, Mark, 2 consecutive quarters in a row, Starbucks had horrible reports. So it's probably a good decision on Starbucks, and obviously the market's celebrating that. Home Depot reported earnings here today, and they came in with a slight beat against expectation, but they also slightly lowered revenue guidance as well. Dell Technologies, third stock story of the day, they get an upgrade from Barclays, and I'm just going to call a spade here. This feels like a stock that is a popular stock, building AI type name stock that has been down a lot, and analysts sees that as an opportunity. So analyst upgrades Dell after getting slaughtered, and they think it's a good opportunity. We will see if we agree with that here in just 1 second. We're looking at Starbucks here today from a charting perspective. The gap up is
That
real.
is called the double shot of espresso gap.
Nice. It's a new name, but the gap did break up about above the 200-day moving average. You came into that 95 handle. The weekly chart looks really good, but again, now you're really overextended. Obviously, you would need to see that news get digested, and it did leave it did leave the gas station for a lot of traders and investors as they were tracking that reversal around 75 to 80. Next day later, we're up 95, but that's what happens when you replace a bad CEO with a good CEO coming from CMG. And Chipotle obviously down on the day as they're losing their CEO, going over to Starbucks. But we'll see what Chipotle has to say about that down the road. Home Depot obviously had earnings here today, and they, like I said, had a little bit of a beat. But they also dropped forward-looking guidance. The mixed report here was enough just to stabilize it against a pretty decent day in the market. Home Depot is very lucky they did not report last week. They would have got butchered on that drop in guidance. And then on the third stock story, obviously, was Dell with the upgrade. And this stock has been down pretty aggressively, 180 down to 90. We're talking about a 50% haircut. And so we're looking at these areas of the market, obviously, as from market participants' perspective, as buying opportunities coming from that 50% clip against the hair price or against the share price. And so you do see those things as opportunities, but not everything is equal, and you got to let the analysis do the talk. And I do agree with Dell getting upgraded here, but I also believe that you need to see better and proper development. You can't just look to buy a stock in a downtrend. You got to let it work out that downtrend through reversal analysis. And that's the beautiful thing about reversal analysis and tackle trading is, Mark, I'm going to be teaching later on tonight in the coaches show on reversal analysis itself. Dell's not ready though.
Commodities not feeding, more downward pressure than upward pressure, pretty muted, but the commodities not feeding off the PPI data at all. What are you seeing in the charts right now?
Yeah, why should they feed off the PPI data? The CPI report's far more important in the analysis than the PPI report, but I'm seeing a breakout in gold, breaking up above that 2,500 level just yesterday. That weekly chart looks very good. It's another day that ends in Y, and that's our message of tackle trading is if it is another day that ends in Y, and you do not have a maxed out position in gold, it is a great day to start building one in gold. And we've been saying that for years and years now. We have a long-term belief in gold for a variety of different reasons. Silver is going to need to see a little bit of a better development. We talked yesterday about how we're starting to see slowing momentum, need to see that work itself out a little bit more, obviously. And then on the copper side of the equation, copper still needs to work out. Obviously, we're seeing some degree of slowing momentum here in both silver and copper. I still maintain that head and shoulders call out on copper. We need to go through that analysis, and that still means breakout of 4-2 if we ever get there.
Yeah, Matt, you're on the coaches show tonight. What are you talking about for our pro members?
We are going to be talking about reversal analysis.
Reversal analysis is very appropriate, isn't it?
Well, that's what we do at Tackle Trading. We hang out and go through the entire market every single day in the Traders Lounge and every single week in the coaches shows. We have very, very relevant topics to not only teach but apply.
Listen, fantastic community. Become a part of it. Go to tackletrading.com. Hit that 15-day free trial. See what it's all about.